What's up everyone, my name is Salman and today I'm back with another video. And in this video I'm going to be talking about the US dollar and the possible chance of increased inflation. Also I'm going to be talking about what investment you can make to hedge against it and possibly make some money too. So let's get right into it. What is inflation of a currency? Inflation of a currency is when you have less purchasing power than you did before. So basically you would be paying more for a carton of eggs and a gallon of milk than you have been doing before. Basically, the currency loses its value. If you have been following the news of the coronavirus pandemic and all the actions the Federal Reserve is taking to keep the economy afloat, then you're going to understand why there's a really good chance for inflation to happen. If you haven't already, please hit that like button and subscribe to this channel because it took me over 6 hours to make this video and it's really going to support this channel. If you remember from not too long ago, this $1,200 stimulus check you received, or if you have a business, a small business or whatever, then you probably applied for either the EIDL loan or the PPP loan. And why am I bringing these up? I'm bringing these up because these are all part of the CARES Act. The CARES Act cost $2 trillion to give out all this free money. And if you think that the Federal Reserve just had $2 trillion sitting in their vault, well then let me tell you, you are wrong. As always, the Federal Reserve just prints out this money out of thin air in a process called quantitative easing. Good old Powell just loves churning that printing machine. So this means that there is $2 trillion more of M1 in the economy. What is M1? M1 is the money supply. It is the currency that is in circulation that people like me and you have either in cash or all the money that we have in our checking account. If you go back to your Econ 101 class, you probably remember that as supply increases of a product, then the value of that decreases. Well, in this case, it's the US currency, and as there is more US currency in circulation, then it's going to be diluted. That's why it is going to lose its value. Now, I know you're thinking, the supply of the money is increasing, but so is the demand. So wouldn't the supply and demand equal out? The simple answer is no. You are right that everyone needs money right now, as almost everyone was sitting at home with no income coming in for months. But during this exact time, the US GDP was down 4.8%. That is a negative 4.8%. This is historic low since the Great Recession. There is more money poured into the US economy right now, but the amount of goods and the production has actually decreased. So now, let me give an example in broad terms to give you an idea. So say for example, there is $10 trillion in the US economy circulation, and there is about 100 million goods that each household typically buys. So if you were to do the simple math, then each basket of goods would be around $100. 10 trillion divided by 100 million. Now imagine if the Federal Reserve just poured in $2 trillion into the economy. So now you have $12 trillion, but the amount of goods in the economy is still the same. Let's keep it at 100 million. So if you do that math, you get $120 for a basket of goods for each household. You can already start to see the inflation happening as you're paying $120 for the same amount of goods that you were before paying $100 for. Now, let's talk about what would happen if the US economy production actually decreased, and instead of 100 million goods, that there was, let's just say 90 million, and there was $12 trillion in circulation as well. The math turns out to be $133 for each basket of goods. Now this is just a really broad example to give you an idea of what it would look like. It in no way represents the actual numbers. But now let's take a look at the actual real Federal Reserve data of the M1 money supply. You can see here that since February, the M1 supply has increased $0.8 trillion and we are in June. This data is only up till April, and when the numbers for May are released, I'm expecting this to get another boost. Now, I don't know what kind of numbers or what kind of inflation rates we are going to get, but I don't think it's going to be a good turnout, especially as the news for May and June, the data for that comes out, then we can start seeing some more effects from it. Now, besides the CARES Act that was already passed in late March, another proposal was made by the House and passed called the HEROES Act. Now, the HEROES Act is going to cost $3 trillion. It has not been approved yet. It's still going to go into a voting into the Senate, but this $3 trillion covers unemployment benefits extended till January 2021. PPP has also been boosted, and it's going to provide payment for essential workers and possible hazard fund pay. Now, if this were to get passed, that would add another $3 trillion onto this $2 trillion from the previous CARES Act. Really, it's just going to be more money printed out, all the while we had a negative GDP during the previous quarter. And if you're hoping for that $2,000 per month stimulus that's been going around in the news, then you can just get an idea of how much it would cost us and the effects it would have on the economy. The third factor that I want to talk about is the Fed just buying up assets and adding onto its balance sheet. During this coronavirus pandemic, the Federal Reserve has been buying up junk bonds and mortgage-backed securities. You can see here that from March to May, the federal balance sheet increased from $1.5 trillion to $3.5 trillion. Most of these junk bonds now have a negative interest rate, but this is to show that all these asset purchases made by the Fed is essentially pumped back into the economy, thus increasing the money supply. These assets are mostly bought from big banks and consumers, so the economy stays running well. And the sad fact is that the Fed has been doing this on a weekly basis in like the hundreds of billions, and there is no sign of slowing down. Now the real question is, what can you do to set yourself up to take advantage of this inflation, and what investment you can make and what hedge you can use to make some money off of this. You can invest in gold. Gold is one of the best investments you can make to hedge against inflation. As you can previously see from the Great Recession, when inflation started to increase, it was a really good opportunity to start investing in gold and make some money. During the Great Recession, trillions of dollars were pumped into the economy as well. So if you look at the numbers, you're going to see that gold actually went from $800 an ounce from the early time of the recession to up to almost $1,900 an ounce. That was a nice 135% return, which happened in a span of about 2 years. And if you check out the prices for gold for this year, you'll see that gold is already up at least 20%. So I don't think it's too late to get invested into gold right now, as the economy is still not in a great position. And the great thing about gold is it doesn't lose too much of its value very quickly. You can see that gold stays pretty stagnant even in good times or bad. So at worst, you won't be losing too much money. And if you want to get some money into gold, you don't necessarily have to buy physical gold either. Another option that you can do is buy gold miner stocks or some gold ETF stocks like GDX. And you can do your own research to see what's a good option for you. Now, another option you can take instead of gold is very similar, and it's actually silver. Silver is actually a really good option to take if you want to invest and hedge against inflation. And silver is actually extremely cheap right now. If you look at the price of silver, actually for 2020, it's already gone up also as well for at about 20%, I believe. And silver is at historic low levels right now, and if you compare it to gold, it has like 100 to 1 ratio right now. So if you want, you can also invest into silver. So one thing that I would like to remind you about and advise you on is that I looked at gold and silver myself so I can invest in it as well. And when I was trying to make the purchase for these, I found out that I have to pay tax. I mean, I live in the state of New York, so you know there's taxes on everything, and it was about like a 10% tax, almost like a real sales tax. So depending on your state, you should really check out how much tax you're gonna pay, because that will have a huge effect. And also, you need to remember that when you do sell these, you're gonna have to actually pay some taxes on that as well. So that is one thing that I think you should remember. Well, that is it for this video. And I really appreciate you watching, especially if you're up to this part. And if you want to support this channel, hit the like button, subscribe to this channel. I'm going to start posting 3 videos a week. And you can start following me on Instagram as well at Suleiman A. Shah.